Welcome to my channel. On this channel, we'll have episodes about stocks, clarinets, saxophones, finances, investments, and other subjects to ramble about. Today's episode is about Chesapeake Energy in late 2019 and institutional public statements. Watching from the news from insiders, institutional investors can give a good, quick windfall if you're watching and prepared and you want to bet on possibilities. What we see on this channel is I try to help you see what critical things to look at and learn more about all the how to watch to buy, sell stocks. So let's get started. There are a few things to learn about here. There are a few things to know about here. Chesapeake Energy used to be the symbol CHK up through about mid 2020. But we're talking about CHK starting November 2019. In June 2020, the new OTC over-the-counter stock symbol for Chesapeake Energy was CHKAQ, and CHK today is actually a Chinese beer company. Who would have thought? And also on April 14th, 2020, they did a 1 to 200 reverse stock split. That means for every 200 shares that you had, they gave you one. This helped them to raise the price of Chesapeake Energy. But in these charts we see, I only did them recently, and you'll see a large number. We have to remember to divide it by 200 to get the actual numbers. So let's review a few things here. First of all, Chesapeake Energy took a big dive due to bad earnings, and the stock fell below $1. This was due to heavy load debt, falling natural gas prices, crude oil prices, and supply concerns. They're considered a too big to fail company, but they're obviously looking at bankruptcy. If maybe not liquidation bankruptcy, but reorganization bankruptcy. Many times in big dives, one looks to see if the stock is going to bounce back, as it can drop too far, but bounce back. But you have to understand the financials. If they have good financials, they can bounce back. If not, as in Chesapeake Energy, they probably won't bounce back. Of course, this situation was one where they did not bounce back. To invest in a company where the stock nosedives, you want to start to hear of how they're going to turn it around with the proper environment for this to happen. Chesapeake Energy was not in this situation. 2, Chesapeake Energy received notice of possible delisting from the stock market. Sometimes news is important to catch a quick return. In this case, I read how institutional and I guess some insiders were going to try and push the stock price up above $1 by buying stock. If we look here real quickly, on the far side, November, we can see where the price did a nosedive, just dumped at the top of November, as you can see here. And then it continued going down until bottom out basically in mid-November. This is when I heard about the investors wanting to try to push the stock price up $1 by, of course, buying a lot of shares. What I did here is I took a bet, and it really was a bet because I'm just kind of guessing. It's like, I don't know whether it will go up or not because the company financial fundamentals just were not there. This is one stock to avoid. As you can see going on in 2020, the stock just continued to nosedive down. Then you had really heavy sell pressures here. Look at these big sell volumes, especially at the end. Everyone just kind of dumped their shares, says, I'm out of here, which was bankruptcy time, of course. But during this time frame of mid-November through mid to late December was a time when there were volumes, there were larger volumes of buys, and this occurred between, I believe it was 10 to 1 p.m. during the day. So you see the price just pump up in the late morning time because of these large buys, and then slowly dip down throughout the day. And then you see it again the next day, or maybe the second day after that. So this was a opportune time to buy, but you had to get in before that. What we have here is a few examples I have just to show you. On December 2nd, I bought shares at 59.58 cents each. Yes, 59.58 cents each, not much, a little more than half a dollar. In this case, you have to buy enough shares to really make a difference to win money here. It doesn't matter how many shares you buy, just 100 shares was $59.58. 1,000 shares was, $595.80. In this case, I held off I think it was December 9th, 7 days later. and I sold them at 74 cents each. That's a 24.9% increase. It, the buy sell price isn't much, but wouldn't you like to get 25% on your money in a matter of 7 days? That's a pretty good profit, even if you take out 30% for taxes, because it's a short time frame. December 9th, though, the share price floated back down. And I was thinking, you know what? Maybe I can ride this for a little bit more. So I bought more. And a few days later, I sold it at 81 cents a share. That's a 12.6% increase. Pretty good money for, in this case, I believe it was 3 days or less. I decided to, you know what? Let me just buy some more and see what happens. So in this case, I bought it December 12th at 81 cents each. And it took a little bit longer this time, which was a sign of times to come. And on the 26th, I sold it at 94 cents each. That's another 16% increase. I made some pretty good money in a short time frame, but because the last amount I held for a long time, I decided to not go in it anymore. I don't think they were going to get to $1 because you just had large dumps of stocks being put out there for people, for the institutional investors to buy. And that's what happened. After late December, you can see right here, the price dumped down. It bounced back up at the beginning of January in 2020. And after that, it just was like the institutional investors gave up on trying to reach $1. As you can see here, this is 200. There's 201 stock split. So this is the dollar line right above it. And they never got to $1. They got close ones, but never got to $1 because everyone just started selling. And after January, the writing was on the wall. The institutional investors gave up, and the price just kept going down, down, down. Then you got into heavier sell volumes, and it just kept going down. And you have bankruptcy at the end of the chart here. So that's something to learn. As we have here, but I showed you here, I made 25% in 7 days. That's pretty good. And then in a couple days, 12.6%. And it took a little bit longer, 2 weeks, 16%. Of course, I was watching on a daily basis the momentum of the buy and sell volumes out there and the price based on that momentum and how the market in itself was doing. So there's a lot to learn here. So as I showed here, there is a lot to learn just by listening. What are the institutional investors saying? What is the market saying? And as I showed many times, you got that dump there, but sometimes you can make money on that dump. Now, I don't recommend you do this type of trading unless you have spare money to bet against the company. Because looking at this is one stock to avoid, as it looked like they'll go towards bankruptcy and lower stock price, which they did. But we learned here a kind of win situation. Because when I heard they were going to try to buy up shares to bring the stock above $1 to prevent delisting, I knew it was a kind of a good bet, and I wanted in on the game just to make some quick money. But the trouble is, it's hard to get a majority of 3 billion floated shares, especially when the financial fundamentals were not there. I knew people wanted to sell the shares to get out of it. That's what was happening. There's a tremendous pressure pushing the price down. The institutional investors brought the price up some. People kept dumping it down. But this is always something to learn, something always to listen to when large players get into a stock, and make your bets if you want to. So I want to thank you for listening to my stock ramblings. Any questions or comments, put them down below. You got to love the knowledge. You got to love life. You got to love the stock market. We'll see you next time. Have a good day.